Number one is to understand your default position. The good news is that your existing lender does not want to see you walk out the door and therefore is going to work very hard to retain or keep your mortgage with them. And the nice thing about that is that if you stay with your existing lender, there is no need to requalify for your mortgage. But just because your existing lender makes it easy to stay with them doesn't mean that you necessarily should. And that brings me to tip number 2, which is to shop it and shop it early. The truth is that it is a competitive market, and there might be a lender out there that wants your business more than your existing lender. So it's worthwhile to connect with a mortgage broker like me to have us present different options that might be available to you to move your mortgage from your current lender to a competitor that really wants it. Now, there's a double-edged sword because if we move your mortgage from your current lender to another lender, you will be required to requalify. However, the good news is that the new lender will pick up all the costs and fees associated with transferring your mortgage and to help attract that new business to them. Third tip is to consider something new. If you have always gone with the safe bet of a 5-year fixed, and you're now looking at new renewal rates for 5-year fixed, which are well into the 5%, approaching 6% range, you might get a little bit of sticker shock because we haven't seen rates like this for decades. So instead of locking into a new 5-year fixed rate term, maybe consider an alternative product, such as a short-term fixed or even a short-term variable or 5-year variable rate that would allow you to take advantage of lower interest rates in the near to midterm without being locked into a 5-year fix. Because the one thing you have to remember is that the penalty to exit a fixed rate mortgage is based on the interest rate differential. So if you're committed to one rate with the lender and interest rates go lower, that delta is the penalty that you would have to pay to exit to refinance, and it becomes very cost prohibitive. My name is Christopher Mulder. I am a Toronto-based mortgage broker, and I love what I do. I love talking to borrowers like you to see if we can keep your current lender honest. If you have a mortgage that's up for renewal, reach out with confidence to explore alternative options. I'm just a phone call or an email away. Till next time, bye for now.